Well, let's, bring in our market master of the day. Mihir Vora is Chief Investment Officer at Trust Mutual Fund. Mihir, good morning. Great to have you with us here. Thanks very much. What are you seeing, Mihir, with, of course, earnings are just about kicking off and expectations are generally downbeat, muted, and IT has kind of shown the way in that sense. But what have you been busy with? Where are you focused on in finding opportunities? Because it's in large parts a fairly finely priced market. Let me put it that way.
Certainly. Good morning, Prashant. Always a pleasure to be here. So I think the market is in a no man's land, I would say. As you mentioned, there are flows which are coming in, and we've seen FIIs coming to the market. Domestic flows are strong. But on the other hand, the results season is likely to be a mixed bag. So there will be some pockets of disappointment, and there will be some good pockets. So I think it's going to be a very stock selective market, I would say. And the macro view is that liquidity, both locally as well as globally, will continue to be ample. So liquidity support will be there for the market. Fundamentals are a question mark, both in the more so I would say on the global markets, especially in the US, because of all the things that are happening there. There is a lot of uncertainty. China is also doing, it's a mixed bag. The Indian thesis is that while current data points are mixed on the economic front, the second half should be better because of the government initiatives and the liquidity that is flowing through. So I think for the next few weeks or few months, it's going to be a selective market and very, very stock specific. Results season should be very interesting.
But Mihir, hi, morning. The question really is, where can the pleasant earnings surprises be? The consensus is saying, I think that we'll get maybe 11-12% sort of earnings growth. But given how stocks are poised and where valuations are, where do you see maybe some pockets of pleasant surprises?
Sure. So if you look at sector-wise, my guess is that there are certain sectors which are coming off a low base last year. So these are usually the ones which we saw didn't do well in the first half of last year, linked to government spending. So some of the construction counters, the cap good counters, a lot of the government spending segments did see a slowdown, defense, railways, etc. So those are coming off a low base for the June 25 and September 25 quarters. So probably we have some kind of a base effect tailwind there. Metals also are coming off a low base, so you may see some pleasant surprises on the metals side. Banking's and NBFCs are going to be a mixed bag. So there it's going to be more a function of who has been able to manage the asset liability well. My guess is that on the whole, NBFCs on the retail side may show a little bit better results than the banks in general, I would say, because banks are still going to have some of the floating rate impact on their asset side because of rates coming down. NBFCs will be far more robust. So it's really going to be, pick and choose across the board. But in general, I would say the capex theme, the investment theme should continue to do well. Discretionary should pick up because we've seen some of the stocks really getting hammered down in the discretionary space, like some of the consumer durables, auto stocks. So they offer good pockets of value. So while you may not have great results in some of these pockets, stock prices already are probably discounting a lot of the negatives.
All right. Hi, Mihir. Good morning. Good to see you in. What are you making of the recent Deal Street action? We had deals on SML Isuzu, you had Akzo Nobel, and you had VIP as well. All those three deals got done at a discount in comparison to the traded price at that point of time. But all the three stocks, in fact, did well post the announcement of the deal, though the deal was at a significant discount to the traded price. Your view on some of these themes, do you believe, change of hands, change of ownerships, will you be betting on some of these stocks doing better in the time to come?
Absolutely. We've now had a good history of, in the last 10 years, we have seen some very good examples of companies either being taken over by strategic investors in the same field or by private equity funds and then done a lot of restructuring, management incentives, etc. And the outcome has been good. So in general, the outcome for the strategic stake sales has been quite good, because it does bring in a little bit of more professional approach, incentivizing the management, shaking up cultures at points in time. So there is a place for us being selective, but definitely opportunities do get created in the last 10 years.
All right, Mihir, got that. So bullish on some of these changes in management. Mihir, what about the capital market players? They were dancing away to the bank. Whether you look at the CDSL stock or the stock exchanges, brokerages, wealth management. Now, some of them have pulled back considerably from the recent peak. We know that there's a long runway, but temporary volumes have fallen. Would you be looking to buy into this dip, or you say that they ran ahead of themselves, so they need to cool down more?
Certainly, there is always going to be a period of cooling off and correction, and that's what we are seeing. Though the secular story will not change, frankly speaking, we also had this, the big hedge fund issue that probably has impacted volumes a little bit temporarily. But we have seen that in secular growth stories, there is always going to be overshoot, there is always going to be undershoot. I'm not talking about stock prices, but in terms of the trading volumes, etc. But the fact remains that as income levels rise, as savings rise, more and more investors will come into the picture, and in general, the growth rate of these segments will be more than the 10-12% that we are seeing for the rest of the market. So these sectors in the longer term, at least for the next 5, 7, 10 years, will continue to grow at a rate which is faster than the rest of the industry or rest of the markets. So in general, if you say that, are these going to be, if you ask me, are these going to be pockets of outperformance for the next 3 to 5 years? I would still say yes.
Mihir, we were just discussing IT with a sector specialist a while back. And at least he had a very, very negative view, not from a quarter perspective, but, several years perspective, because Gen AI is real disruption, and perhaps it's much bigger disruption than the whole cloud migration era. You've been hearing the companies and what they're saying. You're seeing the early numbers in Q1. What's your stance? Looking to buy for the long term at all?
No, we've discussed this. Structurally, we are bearish on the large cap IT companies because even without Gen AI, if you look at the longer term sense, last 5 to 7 years, if you remove the 2 or 2.5 years post-COVID, where there was a bunching up of tech investments globally, the growth rate had come down to sub 10% levels. And when we are talking about India growing at 6 to 7% in terms of real GDP, 10 to 12% of nominal GDP, corporate profits will grow at a higher rate. So we would not really be very excited about stocks and sectors which are growing at sub 10%. That's one. Same thing happened with FMCG. In the 80s and 90s, FMCG was a very fast growth sector, but then it tapered down, and you see the large FMCG companies also struggling to grow beyond single digits. So I think unless IT services companies in India dramatically rethink their service model, their delivery model, the value addition model, I think they will be stuck in this single digit growth rate, which to us is not very exciting.
Oh, okay. I think we're getting visuals from the Tesla showroom here in Mumbai. We can see Mr. Fadnavis there with officials from the company. Of course, we don't have Mr. Musk coming down for this India launch, but I think other senior global Tesla officials are definitely present. And that's the excitement at the store over there. Okay. All right. That's Tesla for you. I don't know. Do we still have Mihir? I think. Okay. Mihir, just a quick final word before we let you go. I don't know if you're buying a Tesla or not, but I don't know whether you continue to be positive on M&M, the EV story.
So, won't like to be too stock specific, but the rural segment still continues to do well, I guess, and we are seeing that the premium consumption story still continues, so SUVs, etc. So we are playing those kind of themes. But I think this is the visuals that you showed are very close to my office. Probably I should go there.
I think you'll walk back with a new car. Who knows, Mihir? We'll talk in the evening. I'll call you in the evening. Okay. All right.
Take me for a drive, Mihir, if you do pick up.
Yeah. Please, we'll be there for a ride. All right. Thanks, Mihir, so much for that. Good conversation as always. We look forward to catching up again soon.